Hello friends, welcome back to a new episode. Today I'm going to explain few things which like my friends and family, a lot of people are asking about guaranteed return plan. Okay, so this is the keyword. Wherever we hear guaranteed return plan, right? People get more excited. So let's explore the concept of what is this guaranteed return plan and what you should do, or what is your point, which is best for you, or which one suits you best. That we will discuss and we'll analyze whether it is a good idea or not. Okay, so let's get in detail. This is Sundar and you are watching Mindful Finance. Directly jump into the detail. So this is a website. I don't want to explain about what is this product or website is, and it has given a product detail where it is showing. So I'll present in the left side of the screen a big size. What it is it's talking about I need to invest 20k per month for 10 years. So this is the investment I need to make, and what they are saying is from the month from the year of you have to pay for 10 years, and from 13th year onward, okay, from 13th year onwards, I am going to get 21.5k per month for next 30 years. So by getting that after 30th year, what they are saying is I'll be getting 24 lakh as a lump sum. Okay, so in total they are saying I would be getting 1.01 crore rupees. So this is the plan. See, most of these plans will be linked to insurance or something. Okay, so partially like insurance, and these are kind of a return, or there are policies like annuity plan. You just meet, there's nothing to do with the insurance, but it is that you pay lump sum, and after some time you'll start to get some kind of a monthly return. So this is the plan they normally propose. So I'm showing some idea of one, which is, I'm again repeating, what they are saying is I need to pay 20k per month for 10 years, and from 13th year onwards I'm going to get 21.5k per month for next 30 years, and after that I will get a lump sum of 24 lakhs. So in total they are saying I'll be getting 1.01 crore, right? So let's get more detail in the Excel. So I'll show in the Excel sheet of the calculation. Just for ignore this column for now. What they are saying is, for example, from this year onwards, okay, monthly I'm going to pay 2,000 rupees. So that will be, so I'm sorry, I'm going to pay 20,000 per month. So in the formula you can see 20,000 into 12. So per year I'm going to pay 2,40,000 for next 10 years. Okay, 10 years I'm going to pay. So 10 years I'm going to pay how much? 24 lakhs. So this is what they have mentioned. At the end of the 30th year, they are going to pay my lump sum amount, whichever the amount I paid, that will be returned back. From 13th year onwards, I'm going to get monthly 21,500. Okay, 21,500 I'm going to get every month from 13th year onward. Okay, so that roughly comes around 2,38,000. So from 2037 onwards, I'll be getting this amount. So end of the 30th year, so till then I will be getting this amount. End of the year, so I'm going to get this much of amount total. This is the lump sum amount. So this is the lump sum amount, and like since for 30 years they would have paid me around this much. So in total they are saying 1 crore rupees I would be getting. So I have made some rough calculation, okay, based on this amount. In this case, if you see, if I pay this is the 24 lakhs I'm paying, right? Since then, in case they have paid all those things, the return I'm getting is based on this 1 crore amount is, if you see, it is 3%. Okay, the return I'm going to get, which is 1 crore, right? It is just 3% I'm going to get. Just imagine, 1 crore is just 3%. I have put a formula and I have explained this kind of calculation in my old videos also. You can go and basically you'll be getting only 3% of the return. In case, okay, in case if I get this money and if I start investing on this, okay, anything, if I plan to invest, and assuming I'll be getting up in a fixed deposit or something, okay, roughly I have put 6%. Let me say if I put 8%, in case if I put 8% return, okay, I'll be getting same 1 crore plus the amount which I have is 42 lakhs, because this money, right, this particular thing, like my yearly invested, that will become around 42 lakhs in the end of the 12th year. Okay, so this money I'm going to invest, and from that return I'm going to reinvest. Okay, I'm going to reinvest from this money. I'm going to withdraw 2,58,000 every year, and I'm going to reinvest. In that case, how much I would be getting is 1 crore plus 42 lakhs. So total 1,42,000 I will get. Sorry, 1 crore 42 lakh I will be getting. Here they are giving only 1 crore 1 lakh, right? So even if I put in FD, I would be getting more than this amount. But point is, they are telling this is a tax-free return. Okay, so that is the catch. Okay, for this much, whatever the amount we got is, this all are tax-free amount. But for in our case, what will happen is we will be end up in paying tax in case every year we withdraw and if we reinvest, right? So that way this money will be taxed for every year. This money will come under your taxable slab. But anyways, fine. So this is the scenario. And again, I'll show some detailed one. I'll just explain a simple concept. Okay, just please focus on this one. down so that you will get an idea. Okay, the same concept I'm taking, like every month I'm going to invest 20,000 rupees, right? 20,000 rupees, even if I put 10%, okay, for they are asking to invest 10 year, right? If I invest 10 years, how much I will be getting? 41 lakh, okay? And after this, I'm going to leave this 41 lakh as it is for another 30 lakh. But what there is from 13th year they're saying, so that means total how many years? 10 plus 3, 13, then 30. So 30 plus 10, 43. So total 43 years they are telling. Okay. So if in case, if I leave this money, I'll go to the lump sum calculator where I'm going to paste this amount, which is 41 lakh, right? I'll put approximate number. Okay. So 41 lakh, considering same like 10%, okay, for how many years? Remaining 33 years I'm going to invest now. It is going to be there as it is. I'm not going to touch anything. How much I will be getting? 9 crore 52 lakhs. Okay. So the only thing is there, they're giving every month. So that is a kind of a selling point, right? So here you need to wait for another 33 years. But there they're giving that money every month for you from the 13th. So let's think, go in that way out. In case, assuming like 21,500, I'm going to invest in a SIP. There also I'm putting just 10%, okay, for 30 years. Okay, how much I will be getting? 4 crore 90 lakhs. Okay, the annuity plan, what's as per their point, if I get that money every month, but actually here I have put 41 lakh, but there it will be 24 lakh. So they are calculating 24 lakh. So if I invest the 24 lakh for 30 years, the return of 10%, so I'll be getting 4 crore. Okay, and this 24, but they are giving only 1 crore, right? So let's go to SWP calculator here. Okay, so I have 41 lakh. So if I have 41 lakh, I'm going to withdraw 21,500 per month. Okay, and this also I'm assuming I'll be getting a 10% annual return for the time of 30 years. I'm withdrawing from this the investment 41 lakh. Let me check this one. Okay, 41 lakh, right? Even if I do a SWP systematically, I do a withdrawal plan, like you can invest in your index fund, okay, and keep the investment as it is, and every month you are getting this money into your account, and expected return is, I'm assuming 10%, say let's 8%, you'll get 1 crore, the same thing, okay, but normally we may get at least 10% we'll get from our side. If we in an average, index fund will give you 13%, so index will give you 13%, so just see, by 2% change, 8 crore, same amount, even if I withdraw, okay, my investment will be having this much of amount, right? So just imagine. So I'm trying to do again 41 lakh, I'm going to put in front of again 1, 10, 100, 1,000, 10,000, lakh, 10 lakh. So 41 lakh, and every month I'm going to get 21,500, 8 crore. Okay, assume that instead of 24 lakh, some 30 lakh, 1, 10, 100, 1,000, 10,000, lakh, 10 lakh. Even if I have 30 lakh, right, for 30 years, end of the 30 years, I'll be having 3 crore 72 lakh. Still, this is my benefit. So you can ask, like people may ask, okay, where this 13% is there? I'll come to that point. I'll explain you where this 13% is coming from. This is 30-year plan. Okay, even if I put a 10%, right? Even you put in FD, and FD also they'll give 8%, but still your end of the day, like you'll have minus. So FD, there's nothing. It won't grow properly. 8% doesn't even work. So even the investments, if you are having something, say 10%, you will be getting 79 lakh back with the 30 lakh of investment. Okay, and if you withdraw 21,500 every month, right? So, but what we are saying that I have shown you clearly, like lump sum, in the lump sum calculator, if I invest, in the SIP calculator, if I invest 20,000, okay, expected returns 12% for 10 years, I'll be getting 46 lakh 46,000 rupees. So now this 46 lakh 46,000, I'm going to stay invested, or I'm going to go in a SWP, systematic withdrawal plan, 46 lakh, 1, 10, 100,000, 10 lakh, and every month I'm going to withdraw 21,500. Okay, I'm going to plan for 10% of return here. The year I'm going to hold is 30 years, so I'll be having 3 crore 59 lakh. Okay, now coming to the point. So you tell me, you may ask how this is possible, right? The data which you are seeing right now, it's a Nifty's data since 2000. Okay, so from since 2000, if you see the annual return, okay, till now, if you take, and I have made an average for this one for a simple calculation. If you see, the average is 15.3%. Nifty's annual return is, if you have doubt, if you have a question, you see the bottom here, you can see average is 15.3%. So Nifty has given 15.3%. This is important thing to note. Okay, and there are times it went to 71%. Okay, there are times it went 51 percentage, minus 51 percentage. So these are time market. So that is why people get worried that if I get into the market, I may lose my money. So that mindset that is why they always people will come and sell you a product which is saying guaranteed returns. If you go and invest in market, see, anytime anything can happen and you may lose the money. Right? This is how people put a thing on us. This dialogue has been there for a very long time. Please start to think smart, and these are the things are being put in your head for a very long time. All our movies, everything speak that investing in stock market will, end of the day, you'll lose all your money. So this mindset is been there since very long time. You have to get rid of that. First of all, I have data here. You can see the data. Data clearly shows that if I would have invested in Nifty, in an average, I would have received 15%. If I see rolling return or anything, that is also going to be around 13 to 14%. And in case if I would have invested very smartly, that whenever market dip in a very like for example say minus 51% kind of a time, if I would have invested more, right, then my return would have been better than all other things. So that is what the proof I can show you directly over here. So think wisely before you invest. Now coming to the point that okay, these are fine, but how can I be disciplined and what can I do for this one? How do I improve my investment strategy? So very simple, guys. Okay, first of all, in my last video also I clearly told that about my strategy and how I invest and plan. First thing is, please invest first and spend second. Keep this in your mind. If you buy anything, car or anything, you will pay EMI, right? So you are forced to pay that EMI now. Imagine that instead of EMI, similar way you have in a mindset that you have to monthly have to pay that EMI as a SIP. Now instead of spending the money, you are investing, but you think that you are spending money. Okay, when you spend money, you are not going to get that money back. But here, similar mindset, you spend that money in a SIP. You are going to invest. Just imagine you are getting a loan amount of say 1 lakh, 1, 10, 100,000, and lakh, 1 lakh. And the rate of interest is nowadays a personal loan, or car loan, all those things, you go for 9% or something. The loan tenor is 5 years. Total amount would be, total interest is this much, and you might be end up in paying 1,24,000. The same thing. So here's the EMI. So you need to pay off 2,000 rupees EMI. You are for the loan amount of 1,24,000. Assume same thing like 2,000 rupees. This is for 5 years. Assume same thing. 2,000 rupees I'm going to invest for 5 years. So I'll be having 1,64,000 in my hand now, right? So think in that way. So when you do this in a smart way, if you do a step up kind of a thing, what will happen is over the period it will increase. Now if you just invest for 10 years, you will end up in 4,64,000, right? And instead of 2,000, assume that you invested 5,000 rupees. This is 11 lakh. And if you keep investing like this in 20 years or 30 years, you will be having in a crores. So discipline is what important is. Just think like 5,000 per month. If you are getting a salary of say 30,000, 40,000, it's a very small amount. 5,000 is, right? Make sure you spend money after saving this one so that you will have this habit. So anyway, that is what I just want to say. I just wanted to vent out. Just a lot of friends are coming up asking this guaranteed plan, FD, safe return kind of a thing. Without risk, you won't get more benefit. First, think about that one. Okay, and the insurance companies are always there to make money. Okay, they are not running business for something like a charity or give all the money to anyone, right? So when you go to this kind of guaranteed plan or the insurance, market linked insurance, please don't do that. Okay, keep investment separately and this kind of a guaranteed thing or market linked thing separately. Don't do that. You can have a term insurance instead of those things. Okay, you will get a good amount with a less premium. The same amount if you put in investment, you will get more return than your other things. So I just want to vent out this one. Please follow this one. Don't get trapped by anyone regarding this thing. Hope you like this video. If you like it, give a thumbs up and share this video with your friends and colleagues. Thank you.